Snipers, you have to see what's happening in the Bitcoin price this Monday, as this is an extremely important update. Stay tuned till the end, because the talk around town right now is that tomorrow is Turnaround Tuesday and that we're potentially going to be seeing a major dump amongst all markets either tomorrow or sometime this week from this bear market relief rally with Apple nearing its previous all-time highs. Let's talk about that, Snipers. First, let's discuss the facts. The public miners are still dumping their Bitcoin, but not nearly as much as they did in June. Notice how in July, the miners sold half the amount that they sold in June, but notice how we're starting to see hedge funds continuing to increase their short positions. As of right now, we are nearing the amount of short positions that we saw in summer of 2020, and we're continuing to see hedge funds net short positions. Michael Burry selling everything and buying a large position in a private prison company after seeing the IRS is hiring 87,000 new agents. What does this mean for the Bitcoin price? Is this a concern for us with Bitcoin? So far, fighting resistance at 24,300. We haven't yet crossed above that. We haven't gotten strong daily candle confirmations above that major resistance. Let's dive straight into the chart, Sniper. Smash the like button for the YouTube algorithm if you support these quick updates. So for Bitcoin, there's a very clear path that we want to talk about. I actually updated this chart, Snipers. We have a new previous weekly open at 23,175. And you know what's really interesting about this Bitcoin chart? I'm just going to mention this for the bears. As long as the DXY doesn't form new highs, I don't expect Bitcoin to form further lows, but a higher low is certainly possible. And right now, if Bitcoin were to just come down to form a higher low at the market structural support, it would show confluence with where we have the most amount of volume in this consolidation at 21,000 US dollars. And so I want to put this out there, Snipers. If at any point we do see a dump, I'm going to be monitoring the $21,000 level or even potentially slightly below that for a potential long position, because if we lose this area of support and 23,175 is the major support level, we also have 23,795. You can see yesterday's daily candle tested that extremely important support level. If we break below this major support, 21,000 is where the most volume is inside of this consolidation. We can expect a bounce here in a potential higher low as long as the DXY doesn't form further highs and as long as the four-dimensional revolving parts aren't really going too crazy to the downside. I think that that would be a good place to enter into a long position if we see that. Now, you can notice here, every time we've gotten above 24,295, the major resistance that we're currently facing, we've only seen wicks, and the bears have continued to defend this resistance level, not even allowing Bitcoin to test its 20-week moving average, sitting right around that $28,000 level right now. But Ethereum did get to test its 20-week moving average. And not only that, the S&P 500 is way and above its 20-week moving average with an extremely bullish weekly candle. So why are we expecting a dump this week? Well, we're clearly facing resistance here, not just the S&P 500. Notice how this bear market resistance level, we're currently approaching this. And here, I'll just throw this out there as well. The NASDAQ actually broke its bear market resistance level because similar to the S&P 500, we had this descending resistance. The NASDAQ now above it, but everything is facing major resistance. As a matter of fact, if we pull up the total market cap, look at this. Very interesting to see this with the total market cap. We are actually facing another major resistance here at 1.132 trillion. And so, yes, we are facing resistance on a lot of charts, on a lot of assets, amongst all of these on my watch list. And so that's why we have to expect what a potential downside scenario would look like. And this is all because the DXY is starting to come up to test this major resistance at 106.56. If we break above it, by the way, the previous weekly open for the DXY just above that 106.56 level at 106.57. If we break above this, then now what the bears are going to say is that, okay, look, the DXY, it just formed a bullish flag. We're currently breaking out. We're going to see further highs. If we see further highs for the DXY, yes, Bitcoin, the S&P 500, the NASDAQ could certainly go further down, potentially form a lower low. But until that happens, we'll keep you guys updated. But right now, the important place to watch for the DXY is 106.56. A break above that will certainly bring the bears back into the market. Now, the S&P 500, not much going on there, but Bitcoin against the S&P 500 chart, extremely important. Over the weekend, we tried to break out, but we failed to do so. We tested this resistance level. We actually knocked out this lower high here, but we got rejected. And so far, we're still rejecting this major level, meaning Bitcoin is underperforming against the S&P 500. Here's another chart we want to watch, because if we do break out of this at any point, that could be a confirmation of a break to the upside for Bitcoin. Right now, Japan, China, and the Euro 100, quite calm, not much going on there. And then amongst the board today, by the way, everything was quite calm. Bitcoin is just not making its move above 24,295. Why is that the case? Well, let's talk about the Ethereum to Bitcoin chart. The Ethereum to Bitcoin chart is a very important leading indicator for altcoins. And notice how we are facing this previous resistance here, where in the past we have sold off many times around this 80,000 Satoshi area, and now we're pretty much testing that same area. Does that mean we're going to be seeing an overall push to the downside in the cryptocurrency market? Well, the Ethereum to Bitcoin chart is in a large range right now, with a resistance of 88,300 Satoshis and a support of 65,000 Satoshis. If we see downside with the Ethereum to Bitcoin chart, we have to keep in mind that Bitcoin dominance could potentially move up, and that could happen in one or two different ways. One way could be if the overall market is dumping, we could be seeing altcoins dump more than Bitcoin, increasing Bitcoin dominance. Or the second way that could happen is if the overall market pushes up, the total market cap pushes up, Bitcoin dominance pushes up, the Ethereum to Bitcoin chart doesn't perform as well, altcoins catch up to Ethereum, or whatever that might look like. So I think the main point to keep in mind, snipers, right now is that Bitcoin is still underperforming the S&P 500. It's still facing resistance at 24,300, and there could be a chance that we do come down. And if we do come down, I would expect just a wick to 21,000 as long as the DXY doesn't break new highs. As long as the equity markets are at least holding themselves together, then we could potentially find some support here at 21,000 where we have the most amount of volume and then continue further up. And so at this point, we have to assume that the path of least resistance when there's low volume, because there's clearly low volume, is always going to be sideways to a little bit higher. Just notice here on the Bitcoin against US dollar pairing on Coinbase, where there's not manipulated volume, we've yet to really get any sort of substantial volume. Just look down there below. Since the major dump, we haven't seen that much volume. We've just been seeing light volume. So the path of least resistance, as I always say, when there's light volume, is sideways a little bit higher, which is exactly what Bitcoin has done, and which is why it's not breaking out just yet. On the shorter time frames, let's look at how Bitcoin looks with volume. You can see here on the 15-minute chart, it doesn't look bad. We're getting a lot of buyers, no sellers comparing to the amount of buyers right now. On the 3-hour chart, you can see we're getting more buyers than sellers here. No large institutional spikes of sell pressure. And so I wouldn't say there's much of a concern just yet. I think that we have to just keep in mind that there are bears still around and that they do want to see potential downside, and that if we do see that, we could potentially test 21,000 again for Bitcoin. But as long as the revolving parts aren't falling apart, I don't see anything more significant than that just right now in the immediate short term. So 23,795 is an important level. 23,175 is the previous weekly open. That's really the range of support that we're in. If we break below 23,000, then we can expect a lot of volatility potentially towards 21,000 US dollars. And then at that point, we have to reassess the situation, look at the outside environment, and see how it looks, as we always update you guys here on the Snipers channel with our 4-dimensional analysis. Thank you all for tuning into the best cryptocurrency technical analysis on the internet. Smash like button for the YouTube algorithm if you support this content. And for this midnight update, Snipers, I'm out. Snipers out.